Well, hello, good people. This is Christine Jones from Clear Choice Financial Solutions, LLC. I wanted to give you a little bit of information because you may have heard or seen news stories about this recent issue of card issuers cutting credit limits without warning. And as you can see, this is the title of this article that is given by CNBC. So let's unpack this and hopefully shed some light on what this really means in the grand scheme of things. So number one, when you have a credit card, that credit card company cannot change the terms of your agreement under normal circumstances unless they give you those changes in writing, and they give you those changes in writing at least 45 days before those changes are to take effect. Now, some of us don't open every single piece of mail, and you might want to start opening, because even if you don't open the mail and they sent it, you are still bound by it. So just, watch out for that. But understand that decreasing credit limits does not fall under that particular set of rules. So in other words, they can lower your credit limit anytime they feel like it, and they don't have to say one word to you. In fact, sometimes your only word will be when you go to make a purchase and you find out that your card has been denied. And I know, while you're standing there wondering, well, what could be the problem, because I had this much available. Well, that may be the time when you find out that you no longer have that much available. So be aware that they do not have to notify you about that. Now, let's move on. We talk about debt to limit ratio. Now, debt to limit ratio simply means that your debt, or how much you owe, is judged against your limit, or how much you actually could use. So you have a debt to limit ratio, and in the credit world, we suggest that you keep that ratio, that percentage, under 30%. That gives you a safe and comfortable area where your score is going to actually do well in that particular category. Now, that category is extremely important. Utilization is extremely important because it accounts for 30% of your overall credit score. The only other category that weighs in that heavily is actually your payment history, which comes in at 35%. So it is essential that you know what percentages are accounting for your overall score, so that you stand the best chance of making good decisions when it comes to the things that you do with your credit. Now let's move on for a minute. I'm going to actually scroll down to a section of this article that I think gives a very good example, right? So we're looking right in this area. Now, they give the example of you having a credit card limit of $10,000 to start off with. And all of a sudden, your limit is lowered by half. So instead of $10,000, you have now $5,000. But let's say that happens, and what you need to use per month is $2,000. So $2,000 out of $10,000 isn't so bad. That leaves you with a utilization percentage of 20%. However, if they cut that limit by half, then your utilization percentage shoots up drastically to 40%. Now you are well over that 30% cutoff that we give. Now, what do you think is going to happen? If that score accounts for 30% of your overall credit score, your credit score is more than likely going to take a dive. And this is absolutely the wrong time for that to happen. So let's explain a little bit about why. Unfortunately, COVID-19 has come at a time when we were already expecting the rollout of FICO 10. So there are many different models of scoring. There's Vantage Score, there's FICO, and there's many different models, even within those two major ones. So, there's been FICO 8, 9, and now there's 10, and as a matter of fact, it's 10T. And so what we're hearing is that this is supposed to really weigh in heavily on your utilization. So now not only was this bad under the, older models, but if this newer model actually does what it's supposed to do, according to, the news that we're getting, this is going to weigh even more heavily upon your utilization, which could even further damage an already ailing credit score. Now, aside from the fact that when you go to make a purchase, if your limit has changed, you may be, unable to make that purchase. There's also the embarrassment that goes along with that. But aside from all of that, let's look at what this really means. Now, let's think in terms of your credit score and what it means in the job market. So if you are a military personnel, if you work for some kind of financial institution, law enforcement, etc., your credit score is likely to be checked. Now, if it is checked, you run the risk of a few things if it's not up to par. They may not hire you if you're looking to gain employment with them, and they could also fire you if you are already employed with them. And certainly that area in between where you actually, are looking for a promotion. Well, if your score is not where it should be, you will not get that promotion. You may ask yourself, well, why would a job care about, my credit score? And let's look at it like this. There's this element of trust. And no one really likes to partner up with someone who does not seem trustworthy. And I get it. Your credit score should not necessarily stand for who you are as an individual. But in today's world, especially when that is often, the thing that companies have to go by, aside from, child abuse checks and things like that, they need to be able to determine, at least in their own minds, what type of person they think you are. And if your credit score is low, what that's going to suggest to them is that you have financial difficulty. And if you have financial difficulty, they're going to wonder what you may do if you become desperate. And therein is the issue of too much risk for them to take. You might be the nicest, most honest person in the world. And of course, many things happen that cause, devastating impact on credit. However, they don't really even necessarily care about that. I know that seems rough, but they don't have the time to get involved emotionally with you like that. They're just looking at the bottom line. Will this person, do a good job for our company? And will we have to worry about them doing something that would be detrimental to everyone in the long run? And so that is why some jobs, some employers look at your credit score. It is the best that they can do to try to minimize risk in their companies. Now, let's also look at things like your insurance agencies. You do know that insurance, especially when it comes time to underwriting, they will look at things like your credit score. And if your credit score is not where it should be, especially if it has changed drastically since the previous year's underwriting, you may run the risk of your premiums going much higher, which is going to obviously mean more money out of pocket for you per month. Now, there's also the issue of rising interest rates. And sometimes the interest rates are so much that it's almost like you're almost paying double for things that you have bought. And so the lower your credit score, the higher your interest rates generally tend to be. And now you're pretty much just wasting money, unfortunately. You're paying for someone else's dreams. So when we look at all that, and of course there are many more things involved, but when your credit score is looked at, you stand to lose quite a bit. Now let's just double down on one other thing. What if you had your heart set on that nice new home? What if you were even in the process of going through the final stages of receiving a mortgage offer, a mortgage loan? That's happening to people in this arena, in this era of COVID-19. For example, FHA tends to have a minimum credit score requirement of 580. Well, they haven't changed that. However, lenders who offer FHA loans are now saying, you know what? They're keeping their score at 580, but we need you to have a 640. And I just heard today that Chase Bank is actually moving up to a 700 credit score cutoff. So that's going to leave a lot of people out. And so we're hearing that people are almost ready to go to closing. And all of a sudden they're receiving calls saying, I'm sorry. We can't do it. And understand that until you sign on the last dotted line, your closing is not complete. And it can be everything you've worked for can be withdrawn just like that. So we want to make sure that you understand what the decrease in your credit limit can actually do. It's more than just not being able to make that purchase. And I don't want to minimize that, because in this era, a lot of cash is not available to a lot of people. And so they're relying heavily on credit. Not being able to make a purchase because your credit limit has drastically decreased could mean the difference between getting food or getting medication and not. We may not be able to control what happens with the companies and what they're doing. And trust me when I say, a lot of the companies have been doing things to try to help, but at the same time, it is not their job to really care about us. That sounds very harsh, but business is business, right? And if they got an emotional attachment to everybody, they probably would never do much business. So my only ask is that you do what you have to do to get an understanding of what is going into your credit file, what is happening with your credit score. You absolutely can work on your credit all by yourself. That is absolutely something that can be done. Is it easy? Not necessarily, but that doesn't mean that it's impossible. But if you are not willing to do it yourself, please seek a reputable company. Of course, we're going to suggest Clear Choice Financial Solutions, LLC, but even if you do not choose us, please choose someone. Please choose a company that is going to work for you as if you were their closest friend or relative, because you're going to need that. You're going to need to make sure that you give yourself every benefit credit-wise in order to sustain your financial status and or improve it. Okay, so if you need to reach out to us at Clear Choice Financial Solutions, LLC, I'm Christine Jones. I'm the founder and CEO of the company. You can reach me directly at 215-901-7651, or you can call the main company number, 888-404-5815. You can even reach me by email, secure email, at CRJones at ClearChoiceFinancialSolutions.com. And if you just want to look around the website or you want to leave us a message from the actual contact form, you can go to ClearChoiceFinancialSolutions.com. I hope that everyone is doing well. I just want you to understand that I fully believe that our people do perish for lack of knowledge, but not under my watch. Have a wonderful day.